For those of us just joining, once again, you're very welcome to today's webinar. My name is Heritage Adisa. And I'll be with you today for the next 1 hour. And we're going to talk about navigating uncertainties in trading. We all agree that trading is speculative in nature, right? When we talk about online trading, forex trading, it is speculative in nature. You're basically taking decisions in the market, finding opportunities, ideally based on information, but there's that atom of uncertainty that you're not sure where price or what price will do. Now, this in itself, can spill out in many ways. It can make traders be more fearful, could create fear in the market, could create self-doubt in the market, could create bad trade management. That this uncertainty that we're talking about, uncertainties about your trade idea, uncertainties about price hitting your take profit or your target, uncertainties about price hitting or not hitting your stop losses, or your pending orders being triggered or not. How do we navigate? How do we manage? How have we been coping with uncertainties in the market? So I'm trying to ask and say that for those of us that have been trading before now, trading for 2 months, 3 months, 6 months, 2 years, whatever the time frame is, you have been in the market, right? There are days when you have predicted a price will go a certain way, you have done your analysis, and price actually does go that way. But there are days when price doesn't also agree with you, and then that uncertainty always hangs over our heads every time we are stepping into the market. So my question to you this afternoon is, how have you been managing these uncertainties in your trading, right? When you're trying to trade, how do you approach it? What do you look out for? And I'd like to hear from maybe one or two people before we go. This one says, well, I navigate uncertainties in the market with simply sticking to my plan and my risk management. Wow, that's quite as summarized as it can be, because I mean, these two things that we have mentioned still answers most of the questions around uncertainties. And one of the things that you have to also have at the back of your mind as a trader is uncertainties cannot be totally eliminated in the market. There is no way to be certain that price will behave a way or another. It is your job as a trader to understand that part or that characteristic of the market and then still position yourself in a way that you can manage, right? You can manage your risk, you can manage your risk, stick to your plan, and still be able to navigate that way. Now, I have a couple of notes I'd like to share with you, and then we'll move on from there. Now, this one says, let's quickly share my screen and then move port to the next screen, and then we can move from there. All right. This note is simply what I just put down to give us some insights about uncertainties as we're talking about in trading. And I said in trading, you're speculating. That's just said, you're a speculator, right? The way I like to define speculation here is you are taking trades based on information, but not being certain of the potential outcome. Yes, based on information, there is a higher probability that price behaves in a certain way, but you're still not certain about that outcome. You're still not certain. And that's where speculation comes in. You see, you hear people talk about the Forex market as the largest financial market in the world. No doubt about that. But you see, in trading the Forex market, some part of the market is transactional in nature. That is, companies needing to buy other foreign currencies for business or for transactions. That's one part. But the part that we are dealing with is the speculative part of it. And in speculation, yes, information like the economy, like policies, like demand and supply, commodity prices, sentiment, whatever you may call it, can influence price. And by monitoring these factors, we can make decisions. We can clearly, make decisions on what we expect a particular currency to do, either rise or fall. We can do that. But even in doing that, right, we are still not certain the price will behave a certain way. So we're stepping into the market, taking a risk, trying to buy an asset, expecting the price to go up. Yes, if price goes up, we'll make a profit. But if price does not go the way we expect, we incur a loss. So how do we ensure that we're more on the right side. And if we're not certain of that, how do we manage all of that? How do we manage it? Because that uncertainty that you say that we're talking about can be managed. It does not spell doom for you as a trader. The fact that you are not certain that price will behave a certain way does not mean you cannot trade, right? I read a quote, um, I think when I was reading this book by Mark Douglas, Trading in the Zone, and it talked about, you a trader not needing to know what will happen to make money consistently. And that it made a lot of sense to me, right? I'll come again with it. It says, as a trader, you don't need to know what will happen, what price will do for you to make money consistently. That information is not even available to you. You can't tell. You can have an expectation. Probabilities can lie in that direction. You can have a high conviction that that would happen, but you're not certain. So if you're trying to look out for being certain that price will behave a certain way, then of course you would focus on the wrong things in trading. So your focus should not be this is what price must do. No, because you don't have that information. Your focus should be on your own process leading up to the trade that you're taking. And I have broken this topic down into three major parts that I would like us to look into and delve in quite clearly. You see, if you talk about uncertainties and how you're not certain that price will behave this way, how then do you take a trade with confidence? How do you go into a trade buying an asset being confident that price will move in that direction? Because if you're not careful, this uncertainty can cripple your trading with fear. This uncertainty can cripple your trading with fear. So, how do we make sure that that is not the case? I put up a very short 6-step process here, or what I can say, a game plan as a trader, right? A trading charge. That is, if you want to trade, yes, you cannot be certain of what price will or won't do, but what you can be certain about is what your actions are leading into the trade and what your actions are after the trade is triggered and while the market is moving. That's one thing you can be certain about. You can clearly define what you will and will not do in the market when you trade. And I said that, look, yes, we know that we cannot be certain what price will and will do. But for us, from our own end, ensure you have a game plan as a trader. You should never step into the market without having a clear-cut set of rules that you use or that you deploy in approaching the market. Number one, I said have an established, clearly defined system of taking trades. That's the first thing. And when I say a clear, established system, you know exactly what it is that you look out for before you ever click on buy or sell. Know exactly how you approach it. Now, at HFM, of course, through our trainings, we talk about finding information, then leveraging that information on the charts to find trades. We talk about these things, right? We talk about market analysis, market research, fundamental analysis, sentiment analysis, understanding the factors that are influencing price and why prices are going up or down. And then we now take that information and convert it into a trade idea. So we discuss this thing. And if you're here, you're extremely new to trading, you never tried to trade before, or you're just getting started and you don't have that information about what sentiment is, about what the fundamentals are, about the factors that drive and influence price, you don't have that information, I would encourage you to please join the HFM Foundation classes, right? Typically it runs Mondays to Wednesdays. Online it starts by 3 p.m. Online it starts by 3 p.m. and it runs to 5 p.m. Once you have an account at HFM, your account is verified and you funded your account, you can run through those classes, right? The links are available to account managers. I'm sure that every client with HFM has an account manager. So you can reach out to your account manager. The link will be ready by Monday. You can reach out to your account manager and then you can get started with the class so that you understand exactly what you should be doing. And for those of us that are a bit more experienced, I'm sure you already have maybe a strategy, something you already do leading into your trades. The question is, what exactly do you do? For me, as an example, when I wake up in the morning and I want to trade, I first open my research platforms and scan through. What I'm trying to look out for is what is currently going on in the markets right now. Who said what? What was released? What is the current driver? What is the current theme? I want to know what is going on because it is from what is going on that I can look out for the reaction in the market and then position myself to take advantage or benefit from that. So what is going on? When I have that information as to what is going on in the market, I then look out for how the assets are reacting. What's going up, what is going down, right? Are currencies rising? Are they falling? Are commodities like gold and crude oil and copper, are they rising or falling? Equities or indices, are they rising or falling? It's when I understand that, I can try to tie that information, that direction to the information I gathered earlier. So if, for example, when I woke up in the morning, I saw headlines and stories saying that Donald Trump has decided to, launch big tariffs on the likes of Canada and Mexico, and who is the president of the US now, he is trying to unleash tariffs that are much bigger than what markets were expecting, maybe 30% tariffs. Ideally, I would expect the currencies that will be on the receiving end of this, the Mexican peso, the Canadian dollar, to lose value on the back of that, just being very plain and being very, I'm keeping it simple. And I expect, of course, that geopolitical back and forth, right? That geopolitical back and forth, of course, would also cause some negative sentiments in the market, and US should strengthen. So I link the information I have gathered to the direction that I have on these assets. And that's where the training is coming, because it helps you understand this. It helps you make the link between what is going on and how prices are reacting. Once I understand this and know that, oh, okay, because of this story, I expect. Right. Are we on the same page? Let me get it. Once I have that information, once I am quite clear on the information and how it drives or affects the asset, and I know I want to buy the dollar against the Canadian dollar, then I move on to my chart. I deploy my trading strategy. My trading strategy is simply the way I step into markets, trades, and the way I get out of trades. So I do that. I want to make sure that I have a clear entry and a clear exit, and I manage my trade. That's my own established system. Yours may be a little bit different, but have one and have it written down. You see, having a clear, established trading system can help you remain consistent. And if it's established and it works, it doesn't matter what is going to happen in the market. As long as you remain in your system that works most of the time, you will be fine in terms of your trading results. You should not overly focus on just one outcome of your trade. Right? You should be more concerned about the overall series of outcomes on different trades. That's what you should be focused on, right? Are we on the same page? Now, when you have that system, now, like I was saying, if you're here, you have no system, you don't know how to place trades. You just know you can trade, or you just know, oh, I am in the market, I am trying to click on buy and sell, but I don't know why I'm doing what I'm doing. I would implore you to please join the HFM Foundation course. It can help you create that and then you can have that better ideas, right, in your trade. But that being said, when you have that system, this is what I do, right? Wait for that system. If your trading strategy says that you only buy when price comes down to support on a certain time frame, whatever system it is that you use, or when your indicator says to buy, if your system says this, you should always wait for that your setup, for that your opportunity, and only then would you place trades. Only then. You should not allow yourself to be drawn into taking trades outside of your established system. You should not. You should be focused on this is my trade that I want to take. How do I always go about my trading? And when I get to the market I want to trade, that's the only thing I should focus on doing. I should not focus on doing something else. I should stick it and only take that trade when my setup is in place. On days when I do not have a trade that is in line with my established system of taking trades, I should not place a trade. This can be a plan. In way that you can navigate the uncertainty is to focus and make sure that your own process is certain. One of the ways that you can manage uncertainties in trading is to ensure that your own process of placing trade is certain. You're clear about it. You have to be. When you wait for your setup and you see your setup, the next thing you should do is ensure you predefine your risk. Predefine your risk. What I'm saying is, do not just enter into trades without understanding clearly what your risk is on that trade, how much you will lose if you're wrong, how much you will gain if you're correct. You must have that information clear. You have to. The reason why this is important is if you know clearly what you are risking on any given trade that you're taking, it becomes easier to allow your trades play out. It becomes easier. Redefine your risk. That way, regardless of what the outcome is, you have a clear expectation for what the, your own profit or loss will be on the trade, and you're okay with it. And I said the next point here is whatever the outcome is, don't worry, it's okay. Look, your trading should be focused more on the overall series of outcomes rather than just one outcome. That's what you should be focused on. Overall series of outcomes. So you follow your process, you predefine your risk, you saw your setup, you took the trade, and then you lost money on the trade. Don't worry about it. Take notes of what you have done and then continue. Keep going. Because one trade cannot tell you if your trading system is totally faulty or bad or good. You need a series of outcomes. And that's why I said, whatever the outcome of the trade is, don't worry. Keep record of it and continue. Another thing I said is it's very in cases, there are cases when you have your trading plan, you have your system, but for some reason you were not at your desk or price had moved before you got there, but you missed the opportunity. If that happens, it's okay. I understand that it may be difficult to watch price move up without you or move down without you. I understand that. But you see, if you allow yourself to be sucked into chasing the market and forcing the market to take you along. So I was trying to buy at support. Price has moved up already to a high level. But because it looks like it's going without me, it looks like price is moving higher. I am correct, but I'm not in the trade. I didn't force my way into it. That is a recipe for trouble going forward. If you miss it, okay, find solace in the fact that you were correct in that trade. Yes, you didn't make money from that specific one, but as long as you keep being correct, you will be fine eventually. I hope I make sense. And I said, look, it's not enough to list the first four. Yes, it's a plan, but the only way a plan works is if you are consistent with it. Stay on track. Do not deviate from your plan. Do not do this today and do that tomorrow. You must make sure that you stay on track and remain consistent. You see, if you have this framework as a chart, as a game plan for your trading, and you consistently stick with it, it doesn't matter what the market will do. You'll be fine eventually. Because as long as your established trading system is a good one, works most of the time, you'll be fine. You miss some trades, but overall, your trading account will look better, would have improved, would have grown. So this is something you can also put down, take note of it, and then take as a chart, something that you hold on to and you use to fight the uncertainty. Stick to your plan. Stick to your plan. You should not worry too much about what price will do. Worry about what you are doing. And I can tell you that if you're consistent with your own plan, clearly solid game plan in the market, trades will turn out better for you over time. You may not win every single trade, but as long as you're true to your plan, as long as you're true to your system, you predefine your risk, you manage your trades better, you have a better result. I hope we're communicating. Now, for those of us that may have questions in what I'm talking about, that you're not clear, you have a question, you want to share something with me, you can please send it in the Q&A. Just send it there. I may not be able to attend to everything right now, but I guess I would attend, to the questions just after. So just please leave them for me. I'll get to them very shortly. The next thing I want you to know as a trader is the position that your frame of mind should be when you're trading. And this is something that I feel every trader should have. And I put a few points under this. I feel like this points can really, drive home what I'm trying to say. But you see, as traders, less worry about what the market will do and more about what you will do also has a role to play in your mind. Your mind has a role to play. The way you think about trading, the way you approach trading, right, is also very, very important. One of the biggest causes of disappointment, one of the biggest causes of negative feelings is expectation. It's expectation. You must put your expectations in check. When you start the journey of trading, right, you already have at the back of your mind, oh, this is how much I want to make in the market. This is what I want to make in the trade. This is what I expect. The trade will hit my take profit. You have all sorts of expectations, which are very good. I mean, the only reason why we're even trading in the first place is because, we have a goal, we have a target, we're looking for something. And that we have this expectation is good. But you see, you should not be too rigid about that expectation and be more rigid with your own rules and approach. I'll come again. A trader must stick. I talked about your game plan just earlier. You now must be rigid with it, right? And then flexible with your expectation. If price behaves, so I'll give an example. I follow my rule very strictly, but yes, I am aiming for 50 pips on this particular trade. That's what I'm aiming for. Now, as price is going in my favor, right? Price has gotten to a clear area of resistance, an area where it's likely for price to start falling from there. And to make it even worse, the catalyst for which I was buying is now starting to fade or starting to change. I should not still stay true to that expectation of the number of pips I'm trying to make. I should be able to adjust that and fit into what I'm currently seeing in the market. Oh, I have a risk to reward ratio of 1 to 3, and I have already risked 50 pips, so I'm trying to make 150 pips. But then price rises towards 90 pips, and now it seems like it's a struggle. Price is struggling to break above that. And I'm seeing the candle formations, I'm seeing the price action signals I'm seeing are pointing that there could be a reversal from there. We're heading into the weekend, the last day of the month. I should not say because I have my target, I must stick to that. No, I should be able to adjust my expectation, adjust my, what I want in trades based off what is currently happening and what I can see. Are we together? Now, what you should be rigid about is your rules. And the problem is, a typical trader, a normal starting retail trader, does exactly the opposite of what I've just said. Their expectations are rigid. But you see, the rules that should have been rigid, should have been unbreakable, are the ones that we're flexible about. So we end up bending our rules to fit into the expectation that we already have. I'll give you an example. So as a trader, you entered into a trade, you set your stop loss, you set your take profit. This is your expectation, right? Or these are your rules that you set. You expect price to move a certain way. You have that already in place. Price is clearly not going the way you want price to go. It's clear. Price is going down. You are buying, you expect price to go up, but price is going down. I'm moving towards your stop loss. And instead of you to stay with your risk management rules, your predefined risk that you already have in place and allow the trade play out, you decide to adjust your stop loss further, expecting that price will reverse. You're now bending your rules so that you can accommodate the expectation that you already set. Instead of sticking with your rules and be clear or be come to terms with the fact that the market does not agree with you. And if you keep doing that, if you keep being flexible with your rules, bending your own rules, right, while having a very firm grip on your expectations in trading, you're going to run into trouble at some point. I'm saying that as traders, have it at the back of your mind that your rules, once clearly established, are unbreakable. I hope we're on the same page. Another thing that I want you to also learn today, this afternoon, is as a trader, you have to develop self-trust and confidence in your ideas. Self-trust is the ability to believe in your ideas, in your trades, and trust that over time they will work out well for you. This is also key. But you see, the only way you can trust something or trust yourself is if over time, right, you have given yourself enough room, yourself grow over time. I'll give you an example. The only way a pilot, right, can be trusted, this is not just now on the sales side, but even generally, the only way a pilot can be trusted with a plane, right, to fly it is that he has been tested over time. He has stuck with the rules over time. And he has proven that, oh, I can do this well, I can remain well within the rules, I can continue to operate at this professional level. A lifetime of practice, a period of practice, a period of learning, a period of tests would have been conducted, right? To now show that this person is qualified to do this. But if as a trader, you don't allow yourself enough practice time through strict rules, it becomes difficult to trust that your system would work more often than not, particularly when you start with a losing trade. Are we on the same page? For you to develop this self-trust, which is something that we need to learn. It comes in from your own rules, your own diligence, your own rules, and your own practice. Give yourself time to get better. Confidence doesn't just fall on you as a trader. Confidence is a result of information and experience. First, you need to have the information. This is how I want to approach this. And then you need to practice over and over and over and over. It is in the practice that you get better, you get more confidence in your ideas. But if you do not give yourself enough time to practice your trading, you don't give yourself enough time to keep growing, you don't give yourself enough patience patient with yourself to allow yourself grow through the process, then it becomes difficult to even trust your strategy, trust yourself, and fear will most likely take over what you're doing. I hope I make sense. The third part of this that I want to touch is the risk. I already mentioned that you predefine your risk. But look, as traders, predefine your risk simply is understanding how much what the outcome of a trade could be, the possibilities, and accepting it. That's what I mean by predefining it. On this trade that I'm taking, if I'm correct, I will make 20 pips, which is so amount. If I'm wrong, I will lose so number of pips, which is so amount. You should be able to tell yourself that. You must do that. One of the reasons why traders may not predefine the risk is because they don't think it's necessary. You just don't think it's necessary. You feel like it's not important to predefine your risk. And the reason why you don't think it's necessary is because you think you know what the market will do. It is very possible, very possible to feel like, oh, I know what price will do. Very, very possible. And get carried away. Now, not predefining your risk because you don't think it's important. I remember what we're talking about today is uncertainties. This uncertainty cannot be eliminated. It's a core part of speculation. And because that uncertainty remains, it means you cannot say you for sure know what price will do. You can only suggest what you believe price should do, but you're not certain of that. And because you're not certain, you must account for all possible three outcomes. Either you make money on the trade, you lose money on the trade, or you break even. You must account for it. Yes, the probabilities can tilt to ensure that you're more likely to make money, but you must account for all three possible outcomes. I'm going to say, you must do that. You must do that. Another thing is, if prices are not going the way you expect them to go, you're in the trade, you've predefined your risk, price is not going the way you expect it to go. Not as an emotional response now. An emotional response is where fear, allows you just panic out and run out and close out the trade. Not as an emotional response as now. The reason why you're in the trade in the first place is no longer valid. So the reason why I'm buying the dollar as an example is because Donald Trump has said that he will sign the tariff bill, right? Or the tariff, order today. And then we have reports earlier today that he may not sign it again. They are looking to review the things or the details of that particular tariff order, right? Something like that, of course, it changes the bias around the dollar, at least for that short term. Because now the reason why I'm buying the dollar was in expectation that it will be signed. Now that it's not signed anymore, the dollar may no longer go up like I expected it to go up. When that kind of thing occurs, cut your losses. Do not wait for your trades to hit your stop loss. Cut them. And the same way, if price is going in your favor, price is moving higher, like you want price to go, moving higher towards your direction as well. Do not just not manage your trade. You can as well close out portions of your trades while it moves in your favor. You can decide to close your trade when it gets to the next resistance if you're buying, or you can decide to close out your entire trade. You can decide to move your stop loss to break even. You must ensure you manage your trade while it's running. I hope I make sense. I put these few quotes here. I said, you do not need to know what will happen on a trade to make money consistently. No, you don't. That you think you do is not absolutely correct. You don't need to know that. What you need is you need to have an edge, your trading approach to the market. And it must obviously help you in terms of your strategy or the whole process, the game plan I talked about earlier. You must have that. And that's the only thing that you trade. You must focus on the bigger picture and ensure you take enough trades. Don't just take one and say, oh, it's good or bad. You must consistently be trading. If you do that, predefine your risk and stay disciplined, you'll be fine. I'll come again. First, you have to have an edge. An edge is the probability of one thing happening over another thing. You must have an edge as a trader. You must, this is what I do. This is how I approach the market. This is my game plan. This is how my strategy is used. You must have that. And you only take those trades when it meets up with that standard. Make sure you take enough trades. You must practice consistently and focus on the bigger picture, not just the outcome of a single trade. Right? You must predefine your risk and you must stay disciplined. See, if you do these 4 or 5 things, you will be fine. You will make money consistently. You are going to do that. As a trader, uncertainty remains in the market, but you should always account for that possibility, right? Account for the possibility that this can happen and that can happen. And don't only focus on what you expect in the market. And when trading losses come, when you have losses, you incur losses in the market, do not, feel, don't be too hard on yourself. Let me say it like that. Because everybody has losses. What do we just do to make sure that the losses are something that is okay, easier to swallow, is that we ensure that we predefine our risks. That way, even when the losses come, they fall well within what we are okay with. But don't let that experience go to waste. Learn something. Learn something. If I take a trade now and I incur a loss, I want to find out what happened. Did something happen? Did something change? Was there something I omitted? Was there a change in the sentiment? I want to know why. What happened? I may not always be able to find why, but I want to know why. What eventually happened later on after I was out? Was it that my stop loss was too close? Could I have put more room between my entry price and my stop loss? Was my volume too big? I want to know these things. So when I'm able to tell what happened, I can take that knowledge and factor it into my next trade. I would not have wasted an opportunity. I would have learned from that experience. I hope this makes sense. I'm going to quickly run through the questions that we have because of our time, and I see how many we can take before time goes up. I have been in drawdowns this month because my stop loss has been tight. All right, this is more like a comment, not a question. And I think one of the things that you can do to better manage this is, of course, to increase the bandwidth between your entry price and your stop loss. But the concern would be if I increase it, does that not mean my risk is increasing? Work on your volume. I would rather put a 60 pip as an example, stop loss on a medium term trade, but reduce my volume than reduce my pip in my stop loss in pips and increase my lot size. That way, I am leaving enough room for price to move, and then I'm still able to walk around that. You should not say, this is the volume I will trade, then now fit your stop loss into it. You should say, this is where my stop loss should be, then now fit your volume into that. Because if you're going to calculate your volume, it should be based on where your stop loss is or the risk you're trying to take on the account. So I think that will help you. Try and give yourself more room. Allow trade to play, but reduce your volume. And in a case where you're already trading with maybe a smaller balance, and but you can't really reduce your volume below the minimum that you're already trading, you can move the money to a cent account to be able to trade smaller volumes. But yes, you can. Since you already know what the problem is, you can make adjustments to that as well. All right, this one says, for me to navigate the market after hitting my stop loss, I re-enter the trade and still lose the same day. But you stay away, and the next day you still trade better and improve your trading. If I get you correctly, you're saying in your trading, when you take a trade and it hits your stop loss and you force yourself to re-enter, you still take losses. But if you stay away and then trade afresh the next day, your results are better. Then that's quite good. I'm glad that you're giving that feedback. And as a person that you've already learned from that experience, that's what I'm saying, that when you take losses, don't let it go to waste. Ensure you learn from that experience because it can always help you in your next trade. All right, this one says, please, is this recorded? Well, yes, this particular webinar is recorded, and we'll see how we can put it up on our YouTube handle later on. All our past webinars being recorded have been posted on the HFM Nigeria YouTube handle. So if you go on YouTube and search for HFM Nigeria, you would see our channel, and in that channel our past webinars through 2024 and currently as we're running in the year as well as other videos have been posted, and I'm sure you can catch some and learn a whole lot from them. Right, this one says, thanks for this wonderful enlightenment. Please, can you share your well-defined trading strategy with us? Well, I think I've already mentioned generally what I do when I want to place trade. Like I mentioned, I first do my analysis, I run through the information, and then I move to the chart and use my strategies, which could be price action, could be the flow system, could be the A plus edge. It depends on what I'm trying to do for that particular day. And we also talk about this regularly in our trainings. So you can please try to join Monday to Wednesday, starting by 3 p.m. online. The link will be available to your account managers from Monday. You can as well join them. But this is something that we share every single time and forms a big part of our training, schedule. And I'm sure you can also learn that as well. Before I enter the trade, I check my fundamentals and technicals to see if they align, and then okay, before I enter the trade, I check my fundamentals and technicals in which they align with each other. So I took the trade, and a few hours later, the trade goes against me. What can happen now? It depends. The fundamentals you're looking for, what is the clear details of it? What are you looking at? Are you just looking at data itself? Are you looking at longer term ideas? What was the currency pair that you took? What was going on with the individual currencies, the technical levels? There are so many questions that we can ask, right? What was the risk you took on the trade? Where do you put your stop loss on the trade? But even all of that, you could consider all of that and all of that be in line and still take a loss. Remember, you're speculating. You can never be certain of all the trade. But if you do everything right from your end, most of the time you'll be correct. And that's what you should focus on the most. Right. We have so many questions running. What is the ideal RR ratio? What is the ideal risk to reward ratio? Now, for me, I'm not rigid with the risk to reward ratios. No, I'm not. I try to be more flexible with it and pay attention to what I can see. Right. So in that case, my targets are based on my swing areas, support resistance areas, and that's what I use for my trades. Right. This other question also falls in the line with that. I'm going to just deal with two of them together. Right. I select stop losses and take profits based on my next swing point in the market. So if I'm buying at support, I look for the next support level and I put my stop losses below it. That's how I approach that. Now, I do not just automatically multiply and just give myself a ratio for my targets. No, I look out for the next key area and I anchor my take profits there. So I'm not too rigid with risk to reward, because what I've realized over time is risk to reward can make you drift and focus on what you want rather than what is right in front of you. And I think as traders, we should focus on what is right in front of us rather than what our mind is wanting or what our mind wants to say. So that's how I approach it. There's no way to tell you that, oh, your stop loss should be so number of pips or that number of pips, because it depends on the chart, depends on the trade, depends on the risk you're taking, depends on the instrument, depends on the volatility in the market at that time. So there are many factors to consider. But one general rule you can apply is by using or utilizing your key areas, support and resistance, right? To set stability. This is something that we talk about in detail in our foundation class. So please do well to join the class when you have the time. Does HFM trade the signals that they give us on the Telegram channel? All right, thank you, Christian. Now, what we post on the Telegram channel are not signals, take them as analysis. And it is, yes, our ideas that we put up on the channel. That's why you notice that we come back to put, reviews on some of the ideas that we post up. We come back to put reviews on them. Okay, this is what happened, and then we quote them. So, yes, it's our trades, our ideas that we are putting on the channel and sharing with you for you to also take advantage of it. All right. What mental exercise or psychology can one employ to manage losses better? Now, one of the things I can say with this is for you to manage losses, for you to be able to accept losses, they must fall well within what you're comfortable with. You see, the psychological stress of losses has a lot to do with your risk management. Right now, as a Nigerian, if you have 50 naira in your pocket, and then for some reason you just can't find it, maybe it fell off, right? The worry that you would have would not be too much. You won't be overly concerned, because if you look at the consequences of 50 naira right now, right, it doesn't really do so much compared to that same thing happening if the amount is much bigger. You can see the difference. You're better able to handle the 15 naira loss compared to the much bigger amount loss. So it's the same thing I'm saying, that even as traders, right, your risk management, predefining your risk and determining how much you risk on every given trade can help you better accept the risk or loss if it happens than if the loss is too big. So a way you can keep your mental exercise, keep it clear, is not a particular breathing technique or a particular, enchantment, whatever it is, right? The one thing you can do to ensure that you're better able to manage the outcomes of your trade is by ensuring you predefine the risk from the very beginning and keep them well within what you can manage. As a pro trader, how do you know beyond doubt that the catalyst to why you took the trade is fading off? Well, I won't say beyond doubt, but yes, to a very large extent, how can I tell that the catalyst for which I am taking the trade is fading off? Now, of course, there was something that happened. There was a story. Like I mentioned, there's a story that clearly tells me that I should be buying this currency. If new information comes up that negates that story, then I'm out. This is how I know. Because I understand why price should move this way, I can tell what can happen to change that bias. I used an example earlier saying if we're buying the dollar because we expect Donald Trump to, put up tariffs, it happened to come back where we're expecting the dollar was strengthening. Then on the Monday, I think the next day, we had reports from one of the major news outlets that Donald Trump would not be as tough with the tariffs as markets earlier expected. That information changes or negates the former bias that we had. This is what you should look out for as a trader and navigate your way around that. There's just so many questions. I really cannot answer all of them. This one says, can you give me some tips of managing the $10,000 account and what time frame will I follow? Now, I don't think time frame can just be spelled out like that. It depends on what you're trying to do. If you're a sentiment-based trader, then yes, 15 minutes time frame works well, 30 minutes time frame works well. Right? If you are a swing trader, then of course for the longer time frame. So it depends on what you're trying to do. So you can walk me through what you're trying to do, and then we can take it up from there. Or you can join the trainings or run through the classes, and you can have that going. All right. This one says my flow system is not working since the year started, 2025. Right. The flow system has an expiry date for a yearly expiry date. So you can send me a fresh message on Telegram with the details, and then I can look into it and see how I can fix that for you. Is that okay? All right. Let me see. This one from Mr. Kingsley says, does HFM have control over my placed trades? Because most time when I'm trading, I feel the system is working against. Mr. Kingsley, the system is not working against you, and HFM has no control over your trades, right? What we have done is provide you access to the market. You get to do your trading yourself. Now, if trades go against you, you need to now ask yourself, what are you doing? Are you trading properly? Because trades, I don't feel the system is going against me. So how come I'm different from you? Right. So what are you doing? How do you approach the market? Do you have the right process in place? Do you manage your risk properly? Because think about it. If you open up a chart without being in the trade and you look back in time, you will see times when your system worked where price moved the way you would have expected. And you would also see times when price moved against what you would have expected. Of course, in that case, because you are not in the trade, you will not feel like the system is against you. So what you want to focus on is what are you doing in the market and are you doing it properly? This is how you can navigate that. Now, there's just so many questions. There's one that is extremely long right now. I'm not sure I can deal with that right now from Divine, but please, our time is up. I do not want to keep this running longer than I can. So what I will do is I will drop the link to my chart right in the Q&A, in the chat box rather, the link to my chart. So please, for the questions I'm not able to answer right now, the link to my chart is right here. You can send me your questions, right? On my Telegram, I will attend to them the moment I can, right? So please send in your questions, those that I can't answer, to me personally, and I will attend to them, right, as best as I can. So please just check I have sent it now to the chat box, and everybody can see that. I have sent this to the chat. Everybody can see that. Please click on the link, send me a message. Let's see how we can answer your questions that we're not able to attend to right now. And I want to believe that we can learn, right? My number is also there. So somebody send me their mobile number or something. Please click on the link, send me a chat. My mobile number is also there if you want to place a call through, and then I would attend to all of them. It's always a pleasure to spend time with us, talk with us, interact with us as it relates to markets and trading. And I want to believe that we have learned something new in the market today. Please, you can catch this video again. It will be on our YouTube handle before the end of the day. You catch the video again, watch this, learn more things, put things down, reach out, ask questions. Let's see how we can help ourselves improve and help ourselves be better. Thank you so much for your time this afternoon. It was lovely having you. Until next time, do take care of yourself and enjoy the rest of your day. Goodbye for now.